I promise full transparency, and so today I'll be showing you guys my entire portfolio, every dollar, every holding, and exactly how I'm building income while still investing for the long term. As a disclaimer, this video is purely for entertainment and informational purposes only. This is not financial advice, and I'm not a financial advisor. Always remember to do your own research and due diligence whenever making any sort of investment decision. Hi, I'm Leon, and this is Leon's Money Flow. On this channel, I'll be documenting my journey to financial freedom through investing, all in the hopes of inspiring some of you guys to start on your own journey too. I recently crossed 500 subscribers, and from the bottom of my heart, I want to thank you guys. I still can't believe that so many of you are watching my videos, and it's especially heartwarming when one of you reach out to me on Blossom and tell me how much you appreciate my videos. Now, let's move on to what you really clicked on this video for, and go to the portfolio reveal. Before we jump in, I want to set a few things straight. This is a portfolio built for me. It fits my preferences, my risk tolerance, and my time horizon. Please don't copy this portfolio blindly. You can use it as a reference, a learning tool, a starting point, but always do your own research and invest in what's suitable for you. My strategy today focuses on three things: consistent income, exposure to strong underlying markets, and long-term total returns. I'm still in the wealth accumulation phase, so although income is nice to have, it's not the most important thing. Total returns is always king. And in my portfolio, I made a few adjustments along the way, and in a future video, I'll talk more about that. Alright, welcome to my full portfolio with complete transparency and all my numbers revealed. So, let's go over my holdings one by one, and currently I have 10 holdings, and I actually am considering to consolidate them into less holdings just so I get to manage less holdings. So be sure to follow me on Blossom to make sure you get any updates. So my first holding, or first four holdings, belong to my index-based holdings bucket. If you listen to my video with Jordan, I said that I like to categorize my holdings into buckets. So I have my index-based holdings, I have my concentrated Nasdaq, so like Magnificent 7 related holdings. I have my newly added sector-based holding, and then lastly I have my Bitcoin exposure. So my first holding is HYLD, which is Hamilton's Enhanced US Covered Call ETF, and currently it's around 5-6% of my current portfolio, and it's yielding me around 12% that translates to paying me around $53.50. Remember, the yields are based on my cost, and so it might be different depending on what price you were to enter the position at. So let's quickly look at Hamilton's website for HYLD. So HYLD I really like because it's a portfolio similar to the S&P 500, but it's a higher yielding alternative, and it has similar volatility. It's Canadian hedged and it's 25% leveraged. All my funds are actually 25% leveraged, except for one fund, which is Biggie, and it's 33% leveraged. I really like this ETF because as it came out till now, it's been a few years, but basically this is version 3 of HYLD as we all know it. As at first, all the Hamilton, if we look at the holdings, it's all Hamilton ETFs, but at first it was third-party holdings, so they didn't really have control over the coverage of cover calls and holdings and management fees, but now they do, and they also just added their Daymax ETFs, so SDAY and QDAY, so that should up the yield even more, and it's actually been increased recently, one or twice, a few times. So let's look at the holdings. Basically, we have S-Max at the top, which is Hamilton US equities. So like your big cap US companies. You have QMax, which is like Hamilton tech focused yield maximizer. Like it has like Apple, Google, Broadcom, stuff like that. It has FMAX as their third holding, which is US financials. So writing cover calls on that, like JP Morgan. It has SDAY, which is, as we know, a Daymax ETF, which comprises of 35 US dividend aristocrats companies, and then for income, it writes cover calls on the leverage portion of its portfolio, which is writing cover calls on VOO, which is the S&P 500 index. Next up, we have LMAX, which is a healthcare yield maximizer. It has stuff like Eli Lilly. Then we have AMAX, which is gold producers, gold miners, and then QDAY, which is similar to SDAY, but it's tech focused, and so it holds like XLK, which is a third party ETF, but it's a pure tech play, so like it's similar to Nasdaq 100, but it doesn't have companies like Amazon or Google. Because it's not just tech company. Then we have EMAX and RMAX, which is Hamilton Energy Yield Maximizer and Hamilton REITs Yield Maximizer. When it says Yield Maximizer, it basically means it's writing cover calls on it. So it's really nice because it has over $1 billion, almost 1.1 billion in assets. It started in 2022 of February, and it's traded on the TSX. It's been performing very well recently, so 22.2% this year and 20.8% the last 3 years. It's lower since inception, and that's partly due to the reason I told you, like Hamilton, when HYLD started, it wasn't the greatest, as we all know now. It had like third-party ETFs and fixed income and stuff that dragged it down. Anyways, moving on to my next holding, it's HDIV, which is also from Hamilton. It's basically the Canadian cover call ETF. HYLD is US, this one's Canadian, but it's like a 70-30 split because it's not purely Canadian, as we'll see when we go over the holdings. It's more of a 70-30 split where 70% Canadian, 30% US. But the current weight in my portfolio is 7.5%. And the book cost, the yield based on my book cost is 10.44%, and that translates to $56 a month. So let's look at their site. And so I have the holdings here. And so HDIV has been performing really well. Like, see, 1 year is almost 30%, and the last 3 years is 21%. They've also been constantly making updates, or not constant, but they made a few updates on this by most recently is also including the Daymax ETFs. It has Q Day and C Day now. But part of the reason why it's so great is it's not purely a covered call ETF. It holds some growth ETFs as well. So it's like a hybrid, and it's best of both worlds. So its top holding is actually not a covered call ETF. It's HFIN, which is in Hamilton Enhanced Canadian Financials ETF. So it's like insurance companies and banks, but not cover calls. The next one, HMAX, that's the same holdings but cover calls. So that's the yield maximizer. And then next we have AMAX, which we recognize from HYLD. That's gold producers. And then we have QMAX, which has companies, as we said, like Google and Apple. Those are US companies, so that's where the 30% US comes from. And so QMAX and I guess QDay. Next holding is EMAX, which is Hamilton Energy Yield Maximizer. And then you have UMAX, which is Hamilton Utilities Yield Maximizer. And then you have C-Day, which is pretty cool. That's the third and final Daymax ETF from Hamilton. And basically, it's really cool because I forgot the number, maybe 15 or 20. It's holding 15 or 20 Canadian dividend aristocrat companies. So you're getting full growth of that. And then the income portion is writing cover calls on the 25% leveraged portion of the fund. And it's writing cover calls on VOO, which is the US S&P 500 index, right? So that's pretty cool. It's like you're getting exposure a little bit to both. And then next we have HUTS from Hamilton. I think this is similar to UMAX, but it's not running cover calls. It's a pure growth ETF, I believe, on the utilities. And then you have RMAX, which is Hamilton REITs. And then you have QDay, which is, we discussed before, but QDay is like technology-focused Daymax ETF. HDIV has a total assets of just over $1.1 billion, which is great to see. And in the last couple of years, HDIV has been performing astronomically. It's been one of the best performing ETFs on the market. Adriano from Passive Income Investing actually has released 2 videos on why he likes HYLD, and the second one is why he likes HDIV. And those are 2 great videos to check out. I'll be sure to link it in the description below. Alright, now let's move on to my next holding. And that one is SDAY, which we are pretty familiar with. So I'll go quickly, but it's currently around 20.6% of my portfolio, and it's yielding me 18%, and that translates to $272 a month. Looking quickly on the holdings of SDAY, So you see 100% is Hamilton Champions Index ETF, which is 35 dividend aristocrats like 3M, Caterpillar, McDonald's, so on. And then you have 25% leverage, so 25% approximately is in VOO, and that's where you're getting your income. It's writing those 0 DTE options, those daily options, and that's how you get paid semi-monthly. All right, now let's look at my next holding, which is QDay, which is similar to SDay, so I'll go quickly again. This is around 8% of my portfolio. It's yielding me around 19.31%, and that translates to $106 a month. Now, if we take a look at the holdings of QDay on its website, we see that it's holding 100% on XLK, which is third-party ETF. You can just search that up to see the holdings, but it's pretty similar to the NASDAQ 100, but it's purely tech, so companies like Amazon and Google aren't there. And then how it's generating its income is it's writing those 0 DTE options on QQQM, which is the NASDAQ 100 ETF. All right. Now, moving on to my next bucket of holdings, which is my Magnificent 7 related holdings, we have HHIS. And HHIS I really like, and that's about 18.7% of my portfolio and yielding me almost 25%, which translates to $340 a month. If we look at HHIS and its holdings, it's basically 19 different holdings, and it's separated into the Mag 7 stocks plus big companies like Eli Lilly and Costco. We have Coinbase, Strategy, Reddit, Robinhood, SoFi, Circle. And the AUM on this one is also pretty massive. It's 1.2 billion. So that's great to see. And it's paying 27 cents a month per share. Nice. Now, next up is Biggie. So Biggie is from Evolve, and it's similar to HHIS. So I have about 18.3% in my portfolio right now. It is slightly higher yield, so it's at 29.45%. And that's due to the fact that Biggie is higher leverage, so it's 33% leverage instead of 25% usually. And it's writing slightly more cover calls, like up to 50% of the portfolio, or like close to 50% of the portfolio, whereas HHIS likes to stay around that 33% mark of the portfolio to capture more growth. But anyways, yeah, so that almost 30% yield gives me about $410 a month, and it's also paying me semi-monthly, so twice a month. If we look at the holdings of Biggie, so it's actually more concentrated than HHIS because there's only 10 holdings. And if we look at the holdings, it's basically the Mag 7 stocks plus Coinbase, Palantir, I think, and Strategy. And yeah, so that's pretty much it. But yeah, more leverage on HHIS and pays twice a month. But it's also fairly new, so we need to see. Now my next holding is pretty new. It's in my margin account, and it's also from Evolve, and it's the Evolve Canadian Utilities Enhanced Yield Index Fund. This is about 6% of my portfolio, and it's yielding me 17.86%, which translates to around $82 a month. And if we look at the holdings of it, it's also 10 holdings. And it's basically TC Energy, Hydro One, Fortis, Enbridge, Rogers, Telus, and so on. So yeah, nothing special there. 25% leveraged, of course. So now let's move on to my last category of holdings, which is my Bitcoin exposure. So starting off with MSTE. MSTE, I'm pretty sure a lot of us are pretty familiar with that. It's been in the news a lot recently because it's decreasing a lot in value, and also distributions have been cut a few times. I kind of fell into the yield chasing trap of this, and that's why I went a little overboard with 25% of my investments going in here initially, and now that's dropped to about half, to like 12% roughly of my current portfolio. My book cost is still way higher than the current price, which is the current price is hovering around 4.8, but my book cost is 12.2 roughly, but my yield is now, with the decrease in distributions, it's only 19.64. I say only because it used to be way higher, like 50, right? So yeah. But this translates me to $415, which is still my highest payer slightly because I have so many shares in them, right? So if we just look at the holdings, it's pretty straightforward. MST, it just holds MSTR, right? Here. MST is actually one of the single stocks in HHIS, because HHIS, I forgot to mention, is a basket of single stock ETFs. So yeah, that's MST. Next up is HBTE. It's been performing really well. Like, I think I was almost up 100% for it at one time. But basically, I threw in a little bit just with the intention of increasing it later. But I just never got to it. Same as HBIX, as you can see, these are both like really little small positions. But I really like HBT. I'm considering maybe like once MST recovers, I can, because I do have conviction in MSTR and Bitcoin as a whole. So once it recovers, maybe I can reallocate or like trim my MST position. I'll keep it under 15%, and then I'll pour some into HBTE and see how that goes. But yeah, basically HBTE is yielding me 28.9%, so that's pretty massive, and that translates to $21.50 because I have so little shares in them. But if we look at HBT, it's really nice because there's 16 holdings, and basically it's access to the top companies in the Bitcoin. It's writing cover calls on the top companies in the Bitcoin ecosystem. So if we look at the holdings, we have Robinhood. So like we have exchanges, Bitcoin miners, and so on. So we have Robinhood, Coinbase, we have Block, MicroStrategy 2, and then we have like Bitcoin itself. So we have IBIT, which is the ETF, the Bitcoin ETF from iShares. Yeah, so this one's pretty nice. I really like it. But moving on to my last position, it's HBIX from Harvest. So this is pretty simple to understand. I think it's just cover calls on Bitcoin. So you remember in HVT, there was a small portion where we write cover calls on IBIT. Well, this is just cover calls on the IBIT. Like 100% of the portfolio is that. 125% actually, because of the leverage. But anyways, this is yielding me, well, current weight is very small. It's less than 1%. And it's yielding me around 20.63%, which translates to $18. And just to show you holdings of HVIX, it's literally just IBIT. Yeah, so it's just physical Bitcoin. So I mean, it's just a Bitcoin ETF. So that's why I'm actually considering to just get rid of it, because HVT does also include that, right? So that's one of the positions that is on my chopping board. But anyways, now that we went through all my holdings, let's go over my totals. So my total deposit is 78K, total book cost 102, and current portfolio 85. So that means my book cost versus value is down 16%, because of the huge decrease in Bitcoin, MST, and also like tech as a whole is also in a small dip. And I'm pretty concentrated in that. But then if you look at my deposits, I'm up 9.2%. And this number I added because I feel like it's still worth mentioning, because I put 78K into my ETFs, and then every month or so, or weeks, if we're talking about semi-monthly, then I get to reinvest that money into more shares, right? And so that reinvesting to get more shares is adding to my total book cost. But I didn't deposit or contribute this money myself, right? So that's why I still wanted to include that number as well. Next up, we have my average annual yield, which is 20.8%. So this is the average weight of all my yields. And then so my monthly income is around 1.7K. This used to be over 2K at MST drops the distribution. And then I bring it back to 2K, and then MST drops again. So it's been pretty funny. I've been up and down the 2K mark a few times. Here's a screenshot that I took from Blossom, because I find like seeing my portfolio visually might be a value for some people. I know I definitely like seeing it too. And then lastly, just for fun, I saw a screenshot that I took of my portfolio holdings back in August of this year, and I just want to highlight how far maybe I've came. So it looks like my portfolio value then was only 45K compared to my 85K now, and I was only making $600 a month from my portfolio. So that kind of is encouraging to see the progress I have there. although I did deposit much more because I focused my energy into really investing. But yeah, there's still some progress and value in comparing the two. So yeah, that is my portfolio. I hope you guys enjoyed that. And remember, this portfolio is just for me and it suits my needs. So don't blindly copy. You can use it as a reference point or to see how I'm doing and just like spectate, but to always do your own research and yeah, don't just jump in a fund because I'm into that or something like that. All right, thanks. You might notice some changes in my portfolio, especially when it comes to the holdings if you compare to older videos. And all these changes were intentional and it came from tracking performance and learning more about the total return of my holdings. In my next video, I'll break down what I learned from being in covered calls and chasing the yield, and why I made these changes and what I would do differently if starting over again. So be sure to look out for that. If you enjoyed this portfolio review, please give this video a like and subscribe to follow me along. On this channel, I'll be documenting my journey to financial freedom, the wins, the mistakes, and everything in between. Thank you again for all the support in helping me cross 500 subscribers, and I'll see you in the next video.